So while the overall market is looking under immense pressure, there are some massive warnings for Dogecoin, Bitcoin, and crypto holders. So let's talk about it. So we are now seeing that the crypto market is still suffering from the pressure created by the ongoing conflict in Russia. Cryptos traded lower with other risk assets, while commodities like oil and gold surged at press time. We can see here that S&P 500 and Nasdaq futures were down 1.5% and 1.9%, respectively. Seeing this situation, crypto analyst Michael van de Poppe has recently warned of the coming volatility and urged his followers to stay calm. Meanwhile, co-founders of Glassnode, Jan and Yan, tweeted that Bitcoin is at a critical level, and if its price fails to break above 40K, it could hit support levels at 34K to 36K. Now, the war between Russia and Ukraine caused gold to surge in price and even top 2K price level for the first time in months. And this is why investors are now ignoring the crypto and stock markets, and they are now heavily investing in gold. So as the gold prices have been surging, they are once again providing merit to the safe haven narrative. And this is not good for cryptos. Now the worst thing is that fears of a recession and a 1970-style stagflation economy continue to grip Wall Street and investors this week. Multiple reports are now showing that recession signals have intensified. With oil and commodity prices surging, it appears that investors are recalibrating their portfolios per an expected period of high inflation and weaker growth. So while Wall Street fears stagflation, analysts believe that global markets will collapse this year. Meanwhile, we can see that Reuters author David Barbusia is saying that recession concerns are showing up more prominently in the U.S. Treasury yield curve. Data from Barbusia's report stresses that the closely watched gap between yields on 2- and 10-year notes stood at its narrowest since March 2020. So the point of all this is that the global markets are expected to see a massive crash amid this Russia-Ukraine war, rising inflations, and many other factors. And since cryptos have continued to show their correlation with stocks and investors are backing out of the crypto market, it means that things may get a lot worse for cryptos from here. However, these are some early assumptions, and I believe that it is too early to predict what is going to happen from here. I think we should just wait and see how things unfold in the future. On the other hand, there are some positive updates that may provide some relief to crypto holders. So we are now seeing that Wharton's finance professor Jeremy Siegel believes that Bitcoin is going to take over the US dollar amid this rising inflation. Commenting on Federal Reserve Chairman Jerome Powell indicating last week that the first rate hike will be in March and will likely be 25 basis points, Siegel criticized that the Fed is already behind and should be making a more aggressive move. He said that he is disappointed that Chairman Powell did not look at the history and that this is not a time for them to slow down. So seeing all this, he is saying that the US dollar is going to tank and Bitcoin is going to take over. And now if we come to Bitcoin's current price, we can see that it has continued its sideways movement. As of now, things are looking bearish for Bitcoin since its crucial technical indicators have entered the negative zone. So it appears that Bitcoin is currently in a make or break situation and things can go anywhere from here. But there are still some positive things, so let's talk about them. So as per data from Sentiment, Bitcoin continues to see coins moving off of exchanges while prices are near a 6-month bottom. Interestingly, 21 of the past 26 weeks saw Bitcoin moving more off of exchanges than onto exchanges. So this major outflow of spikes is actually bullish for Bitcoin as it is signaling a price rise in the future. Meanwhile, crypto strategist and trader Credible is saying that Bitcoin's recent correction below 40K has set the stage for it to rally to the 50K level in the coming weeks. He believes that Bitcoin's rejection at 45K on March 2nd indicates that it is now trading inside a triangle pattern while carving a bottom. So this is yet another bullish indicator for Bitcoin, and let's see if it actually turns out to be bullish for Bitcoin in the coming weeks. Now coming to our next update, we are seeing that the founder of Skybridge Capital, Anthony Scaramucci, has doubled down on his 100K Bitcoin price prediction. He also believes that Bitcoin could reach 500K a coin in the long run. He further said that Bitcoin is early adopting technology and it will be very volatile. There will be periods of time where Bitcoin will crash, down 50+%. But if you're willing to zoom out and look at the long-term chart and look at the adoption story, Bitcoin gets to $500,000 a coin. And now coming to Dogecoin, we can see here that it is also under immense pressure. And seeing its price movements, it appears that Doge is under a bear market. But I think that this bearish momentum is going to remain for the short term only, and things are going to get better in the long term. In any case, what are your thoughts on this? Where do you think Bitcoin and Doge are heading from here? Let me know in the comments section below.